How do you feel about the listed defence space? Because this is an area, it goes hand in hand with small caps, which has generated a lot of interest amongst investors, not least of all because of the India-Pakistan developments. But it clearly seems to be part of the Make in India campaign, the indigenization of the defence industry and possibly increasing the export potential. Is this a good space to own? Or is it looking overvalued?
So we are GARP investor, growth at reasonable price, and we don't find reasonable price in that space because it's quite in fad. And yes, it has longevity of long-term growth. Yes, it will gain market share, but we find better opportunities in other sectors than defense as of now, just because of valuation. And Sri, on your valuation point, which you asked earlier, I wanted to touch upon, India offers you a higher return on equity, highest in all emerging markets. India offers you longest growth runway because of demographics, where everyone else is having negative working age population growth, India is having positive working age population growth. When you put these things in construct, the optically high PE might not look that high as at the first glance. And second point, versus US, the real and nominal rates today are at the lowest of last 25 years. And the valuations of India are 2 standard deviation lower versus US. So something has to balance. So what I'm trying to say is, yes, India looks optically high, but that is because of higher ROE, higher longevity. If you remove those, it will look, those stocks which give you higher growth, higher ROE, it will look cheap. Second, I was trying to offer a thought that in spite of inflation differential, interest rate differential being the lowest of last 25 years, India equity valuations are 2 standard deviation low versus MSCI All Country World Index, which is very interesting.
Anand, final question. I know that we have to be selective, but when you think of the auto companies, pharma and IT services, they seem to be the ones that are most exposed to the externalities, to slower growth conditions and the tariffs. So how selective do we have to be, and how are you approaching those 3 sectors?
We love contrarian opportunities. Yes. Any company which is gaining market share, has a strong competitive edge, is opening new accounts, whether it's IT, information technology, or a CDMO company in pharma or in auto components, and is being sold, to a 2 standard deviation low of last 10 years, 20 years, is an excellent opportunity. Maybe you can't lose money at that price. You might lose 3 months. So India has become a very diverse pool of stock picking opportunities now.
Very, very finally, where does this put your end year target for the benchmark Nifty 50?
We think these double-digit earnings growth, more than 6% real GDP growth, will continue to compound. India has delivered more than 10% dollar return last 5-year, 10-year, 15-year, 20-year, 30-year. Indian GDP has been more than 5% last 5-year, 10-year, 20-year, 30-year. We think there's enough long runway for this to continue.
We can retake 26,000 by the end of the year?
I think earnings will compound with these positive surprises. I mean, you should just focus on, riding the compounding rather than trying to get XYZ level.